the early stage financing of startup businesses and growth businesses is key. Financing that does not require collateral, that does not require interest repayments, that sorts out technologies and therefore is a way of filtering which technologies will be successful, and not just finances them, but finances them in different rounds and takes them on to the next level of financing, whether it's credit or private equity, etc. The VC model, it's another form of incubation. It's focused on finance, but it's not just providing capital, it also provides management support. So it's another form of incubation. We work very closely with the companies and entrepreneurs we invest in to make sure that they're successful, understanding that many of them will not be. That's a part of our ecosystem. And that failure is not necessarily the end of the world, that people who fail can go on to set up more successful businesses later on. So for that financing to happen, there is an ecosystem. And that ecosystem includes investors in the venture capital funds, fund managers themselves who do the allocation, and entrepreneurs who seek venture capital. Not all entrepreneurs will access venture capital, obviously. We have a whole area of service providers, the lawyers, the accountants, the tax experts, etc., who need to understand the venture capital model and how to advise their clients who are either investing or accessing venture capital. And last but certainly not least is the policy environment. Very, very important that our policymakers understand what venture capital is and are able to put in place policies that can help stimulate venture capital ecosystem in their environments. So just to go through each of those stakeholders very quickly. With our investors, these are the 10 different categories of investors. Pension funds, sovereign wealth funds, fund of funds, development finance, capital markets, corporate investors, insurance funds, foundations, endowments, government agencies, and angels, private individuals. If we look at how these different investors, what their contribution is to the fundraising of venture capital, you may not see this clearly, but what this illustrates is that in Europe, in 2007, 2008, and even now, the largest investor groups are our pension funds and fund of funds. Until we have a domestic investor base, and by that I mean African pension funds and African fund of funds investing in venture capital, we cannot realistically expect international institutional money to come into Africa. So that's a very important part of what needs to happen next. So just to talk on the fund of funds for a minute. The fund of funds is like a accelerator. We invest in a number of funds. We raise money from those same institutional investors, but we invest it not directly in the businesses, but in different funds, in existing funds, in new funds, and we co-invest as well. One of the soft ways of going into a new asset class is through a fund of funds. We reduce the risk of the investor because we're investing not in one fund, but in a number of funds. And it's been used in many different countries as a way of developing their venture capital industry. So fund managers, these are the second group of stakeholders. There are different types of fund managers. There are direct funds, which you would have heard of. There are quite a few of them here, East African Capital Partners in Kenya, etc. There are fund of funds. And then there are individuals who are making direct investments in businesses, not through a fund structure specifically, but the structures of their investments are equity investments, are private equity and venture capital type structures. And so I include them there. This group of people tend to migrate to become funds, having gotten some track record on their deal-by-deal investing. And then we have entrepreneurs. I think we're all clear that not all entrepreneurs will qualify for venture capital financing. We are looking for high-growth businesses, startup, early-stage expansion, or buyout. And there are a number of examples here, I'm sure, across Africa and internationally. Policymakers. There are different groups of these. We start with our regulators, the regulators of the investor groups. So in Nigeria, we have PENCOM, who regulates the pensions industry. We have NICOM, who regulates the insurance industry. We have the Securities and Exchange Commission that regulates the capital markets. And we have the CBN, Central Bank of Nigeria, that regulates the banks. And all these regulators have an important role to play. PENCOM, a couple of years ago, for the first time, allowed Nigerian pension funds to invest in venture capital and private equity. And then we have different ministries, departments, and agencies. And there are some key ones: the commerce industry, the finance ministries, the sovereign wealth fund we are getting in Nigeria, for example, and other ministries all have a role to play in developing venture capital financing. What are the things they need to do? They need to raise awareness. They need to anchor new venture capital funds. They need to seed new teams, co-invest, guarantee new investors, provide waterfall investments, and they need to do this in sector-specific areas. So, for example, a Ministry for Environment might decide to support a number of venture capital funds in the renewable energy space. A tax policy, for example, your tax regulators need to understand the nature of venture capital and put in place policies that allow pass-through taxing. So you're not taxing every single entity and creating multiple taxation. And then, of course, the general doing business environment, which applies to all businesses, not just venture capital-backed businesses. All of this needs to be organized. And to my mind, that organization needs to come from the private sector, what we call the organized private sector. And so the role of national venture capital associations, for me, is key. They are the entity that needs to identify who the stakeholders are in their environment. They're the ones who need to organize awareness and training sessions. They need to conduct research to understand what's happening within their industry and what's not happening within their industry, and publish industry activity and insights. In the US and in Europe, we have national venture capital associations who make a point of articulating what the economic and social impact of venture capital in their environments are. And this helps them to get more recognition from government and to make a case for specific interventions from government. They host networking events, annual conferences, etc., and do proactive policy advocacy at the national level and at the supranational level as well. In Nigeria, a number of initiatives have been implemented to try and facilitate this. And I'll just mention them because we might have a chance to discuss them when we do a deep dive. We had the Small and Medium Enterprise Equity Investment Scheme, where banks were asked to set aside 10% of their pre-tax profits for equity investing. Henshaw launched a Nigerian National Private Equity Initiative, which was awareness raising. There's a pension reform I mentioned. We had a U-Win program for youths, where youth had a business plan competition. We have an initiative to set up incubation centers across the country, and there have been legislative inquiries into the capital markets and pensions, both of which have implications for venture capital. In Kenya here, in 2007, we had an initiative with the East African Development Bank, which was financed by the US Trade and Development Agency, to set up an SME venture capital fund. That fund evolved into what is now Fanisi, a fund run by Aisi Makatiani. And we've had some pension initiatives here as well, trying to encourage pension funds to invest in venture capital. So what is required? I think I've mentioned this in the course of my talk. Awareness raising, for me, I think is the very first and most important thing. Entrepreneurs need to understand venture capital. The investors need to understand how to invest. We need new fund managers, etc. We need to anchor new funds. Yeah, I'll give you an example. In Nigeria, we have about 20 to 25 new funds that are trying to start up. It's a very difficult task to start up a fund, and so we need the interventions to help people start new funds by anchoring these new funds and also supporting the teams. In helping to start new funds, it's important to be able to provide co-investment, because no investor likes to go into a fund or an investment alone. We also need mechanisms for guaranteeing new investors, and we're working, for example, with USAID on looking at how to guarantee at least some of the pensions investments into private equity. We also need waterfall investing, and that means that you invest in a way that you take any first losses, and the investors you're trying to bring into the market therefore get a better deal. And specific support for the national venture capitalist associations. This is important because we don't have critical mass. In countries where we have 10, 15, 20 maybe venture capital firms, it's important that those associations are supported because their membership fees do not support associations' activities. So we need interventions to support them. Most importantly, we need political leadership and will. As I say, we've been talking for a long time. We've been talking since Mombasa, and we know that political leaders have heard, but what have they done about it? We also need DFI support, but in my view, that needs to be on the back of African governments' understanding and support for the asset class. I think from a government perspective, we need to pay more than lip service to private sector-led initiatives. We talk a lot about the private sector, public-private partnerships. And then when it's time to act, you see all these initiatives domiciled within governments. And it's important for governments to let go, really, and to domicile, situate a lot of these initiatives in the private sector. So don't crowd out the private sector, stop talking and start acting. What case do we make to pension funds? There are really a number of things we say to them. Most importantly, private equity offers one of very few long-term assets, and they have long-term liabilities. So the asset liability match fits. If they continue to invest just in short-term instruments, then they are at risk of not meeting their long-term liabilities. Also, private equity offers higher returns over time, and all the statistics show that. So it's high risk, so we do not expect them to invest all their money in private equity, but if they're looking for higher returns, the best performing private equity funds, the top quartile private equity funds in Africa, return in excess of 40%. And so the trick is in trying to pick the funds that will be in that top quartile. And so this is what we say we help them do.
Well, as Barbara was mentioning, you know, there's all the actors in the ecosystem have their faults. I could see how the World Bank and the IFC are crowding out the private sector. But I also, as another stream into our event here, I also want to essentially have everybody be very critical, be self-critical of their own position. So I am the representative of infoDev World Bank, and I tell you, we are the most entrepreneurial within the World Bank, which is not entrepreneurial at all. So with that self-critical assessment, I also want to say, you know, fund management business has been pretty bad in the past 20 years. No innovation at all. It's still the 80-20 situation, still like 5 managing directors trying to do the same over things. So from that perspective, I think here it's almost like how Africa, some countries in Africa could skip over the 3G and go immediately for 4G. We can like skip over some of these things. Banks will not change. I mean, I told this before. Fund managers don't seem to change, and you know, right now the debate in the US is 95% of VCs don't fail to return money. So as an asset class, 95% of them fail, which is worse than the entrepreneurship failure. I mean, imagine that. Imagine that all the good names, the big names, Sequoias of the world, they fail. They fail to return money. So as a result, I'm looking forward to this discussion here where we can say, okay, what can we do to go to next step? What are the next steps? Is it crowdfunding? Is it acceleration? Is it something else? So I'm very excited about that. And again, send me an email. I'll send you all our reports, everything. And we're active here. We're committed. We do research really well. World Bank does excellent research, so I'll share all that with you. And also some of the other activities that we have on the ground, especially the facilities attached to thematic and non-thematic incubators are pretty innovative too. Thank you.
Thank you. We take about 20 students a year from Ghana, generally the brightest and best in Ghana. We put them through a 2-year program where we teach them software development, and then we teach them how to start companies. At the end of the program, they have to start companies. So they form their own teams, they start companies, and then they pitch them to the CEO of the funding corporation. And if we like their ideas, then we put them into our incubator. So currently we've got 8 companies in the incubator. We've had 10 so far go in there. 2 have failed outright. There's a couple that look really promising right now. We're not, you never know. But, if you're a venture capitalist, if you fund 10 companies, if one makes it, you feel lucky. So the program's been in existence for about 4 years. We bring in about 20 entrepreneurs a year into the economy in Ghana. And the idea is that we can create the next Silicon Valley in Ghana. And I think one of the reasons that we focused on software instead of manufacturing or hardware is because if you're starting a program, you can start an IT company, a software company, with just one guy and a computer. Whereas if you want to start a manufacturing facility or a juice production factory or something like that, it takes tons of resources. So with just one guy and a computer, you can start a company that could become global. So the whole plan of the program, the goal, besides creating the next Silicon Valley in Accra, Ghana, is to have a company that gets big enough where our percentage stake that we take, we fund them with equity. The goal is that our percentage that we take will be high enough that when one of these companies has an exit, it'll refund the program. So currently there isn't, it wasn't funded as a profit model, but I think working with all of you guys, talking about our program, I know everyone is interested. We get VCs that come and visit us twice a week. We have venture capitalists who come and looking at our program because they're seeing a different way to invest in Africa. And so I think eventually our model could be turned into a for-profit model. It's yet to be seen if it's going to be successful or not. I think everyone is waiting. I think as soon as one of our companies gets bought by Google for $1 billion, there will be a flood of investors saying, okay, replicate this program. Let's do it in other countries. Let's make it bigger.